G'day everybody, TraderCobb here. Don't forget to follow me on Twitter at TraderCobb, C-O-B-B for Bravo. Jump on my Facebook, TraderCobb, give me a like, and jump on and subscribe to my YouTube channel. Don't forget as well to sign up to TraderCobb.com for your bi-weekly free trading video newsletters. Guys, I'm going to teach you a bit more about mastering price action using moving averages. As you'll know, I put everything into price action. As a matter of fact, to the point of which if somebody said to me, Craig, you can have any indicators or all indicators that you like on a chart, but not price. Or you can have price and no indicators. Well, I would take price with no indicators, hands down, and I'd still make money. And here's the reason why. Price action is truth. It is price measured by time. And what you'll hear as a reoccurring theme throughout all of my content, whether it be free or paid, is that you've got two choices when you're trading in these markets. You can buy and you can sell. And if you're not coming back to objectively making decisions around those two outcomes, you're not trading, you're just having a bit of a crack. So it's important that we come back to objective decisions based upon solid foundations and good rules, and this is where price action comes into it. So let me introduce you to that. We're looking at the moving averages, and as you'll be aware, price doesn't just move straight line up or straight line down. It moves in waves, and you'll hear me throughout all these presentations. I talk about trading as a language. If you learn the language, you can speak it, you can communicate, and you can actually get around. If you try and demand the market to do what you want to do and you fail to grasp what the market is telling you, you will fail. It's a fact. Just the same as if you go into a country and start yelling in English and they don't understand that, you're not going to get very far. It works in a rhythm. It's like a wave. It's like a dance. It's beautiful if you let it be, and if you understand it, you can make beautiful things. If you don't, you'll have two left feet. So, moving averages are the way that we find these waves, this area of equilibrium, the point at which we look for buying and or selling opportunities, and we use these for that zone entirely. Now here's a little fact for you. Many of you have seen moving averages, many of you may use moving averages, but do all of you know what they actually are? Price comes first. All indicators, all moving averages, everything else you include on a chart is secondary to price. That's why I put so much emphasis in price action. So therefore, the use of these moving averages are important if they're used correctly. Let me show you something. What does the 10-period moving average stand for? It stands for the last 10 candles plotted on that chart, smoothed out into that white line. The 20-period moving average is the purple line, and it is the last 20 candles smoothed out on that white line. I use the exponential moving averages, and like I said, about 90% of people may not have known that. And that's not to take away from anybody, because many of you will know, because many of the people that come here to TraderCobb.com have done some trading in the past, and you might know a little bit. But I want to take you now through what not to do. Are moving averages support and resistance? Absolutely not. There are many lessons that I'll teach, and there's plenty of other videos that you can go through and watch, and I'll let you find it. But true support and resistance is horizontal, and that is it. I don't use sloping trend lines because I'm an objective trader. I'm an outcome-driven trader, and I don't like subjectivity. And sloping trend lines are completely subjective. You can move them however you want. What about this one? Oh, but the moving average is crossed, TraderCobb. The 50 went up through the 200. It's a, what do they call it, a golden cross. Do you know what? What you're looking at with that is the price has already moved. That's why, remember, the moving averages move based on price, hence the name. A moving average. A moving average of what? A moving average of the price. So for the 50-period moving average to come up and cross through the 200-period moving average, that means price has already moved. It does not mean that it will continue to move. It is not a bullish signal. Okay, if you understand where this comes from, you'll understand why it's absolute rubbish, and it will not serve you at all. I use moving averages as zones, places for price to pull back into. The buy zone is the area in and around the rising 10 and 20 period moving average, and the sell zone is the area in and around the declining 10 and 20 period moving average. Now let me take you through to the live market right now and show you, because I don't need you to just believe me. I challenge you, go and check it, do your own research for sure. But you'll find out that I'm on the money here, and this is a fact of nature. Now, this is not the entire strategy, because I do have a strategy that I teach in my courses called the Crypto Cradle. This is not the entire strategy. This is one tick And amongst 17 ticks that you must have, or that you can have, for this trading strategy in my systematic checklist approach. One step is the moving averages. Let me show this to you on NEO on the daily. Look at this, pulls back into the averages, moves away, pulls back in, moves away, pulls back in again recently, moves away. That's the daily time frame. Does it work on the lower time frames? Absolutely. Pulls back in, moves away, pulls back in, moves away, pulls back in, moves away, pulls back in, moves away again and again and again, and here we are once more. You can go across onto any platform or any product, whether it be, you can even look at it in traditional markets on stocks and shares. It doesn't matter. Any market, any time frame, price pulls back in, it moves away. Going back further, price pulls back in, moves away. Pulls back in, moves away, so on and so forth. Now, I'm not telling you this because I want you to try and buy every time it pulls back into that zone, or sell if it pulls back into the sell zone. I'm telling you this so you can start to round out your opinion and understanding of the individual ingredients that it takes to be a successful trader. Guys, there's plenty more free content. Go through my archives, check it all out, guys, and please do me one favor. Share this across your socials if you like it. I'll continue to make free content as long as I possibly can. Jump on TraderCobb.com if you haven't already. Check out what I'm doing. Sign up for the bi-weekly free video newsletters, and I'll see you very soon. Bye for now.